And what happened to those big losses about an hour and a half ago? So we kind of covered all the whole span here today. Rallies right now are suspect, but you have a market right now that's kind of wounded, and all of the attempted bounces have basically faded pretty quickly. So I do think that instinct made sense today, but as you guys have been talking about, this was not some kind of a comprehensive washout trade. You had 2 stocks up for every 3 that are down. I'm not sure that's a good thing. I think you have all these trading programs looking for that final flush. Today was a Monday. That was a day you might have gotten it. You didn't quite get there. The market goes hunting for where there's still profits. That's big cap tech. That's why they took you down.
Let's bring up an intraday chart of the Dow again if we can, because if you're just joining us, we can't emphasize enough what a bizarre and wild day, really bizarre and wild last hour it was. What was our low? We were down 500 and we were up 352. So you effectively had a 900, Mike, a 900 point swing in the markets. You wake up tomorrow, you figure out we're down. We closed down 245. Oh, it's not that bad. The market looked very bad about 30 minutes ago.
It did, at least at the index level. It absolutely did. We've widened out the scales of kind of what moves we're willing to take. It's all in the hands of tactical traders right now. It's not somebody saying, do I want to own Boeing at this price or 50 cents below? It's basically swinging these sectors and the indexes around. That's not to make it a sinister thing. It always happens when you have the market under this kind of pressure, 5 or 6 weeks into an almost straight down move. So I do think everyone's attuned to the fact market's very oversold. Lots of stocks been pummeled well beyond what the index have. We really should have a very strong bounce here, whether in fact this is just the end of a correction or the beginning of something more.
People keep saying it's oversold, it's oversold, it's oversold, and
guess
then
what?
they're waiting
Crashes
for the
happen when the market's oversold, but so do huge rallies. Oversold just means it's down a lot in a short period of time.
Do you think there's an ETF effect at work here? I know I got Kevin O'Leary waiting. He'll have an opinion on this, where the biggest cap stocks, Apple, Microsoft, Amazon, Google, that control a lot of ETFs because their weight, they're 20 and 30% of some of these ETFs. They're getting sold in a rotation, which then affects the skew of the overall market.
I don't think it happens from the direction of people selling the ETF and therefore the stocks go down. I don't.
No, reverse it. They're selling Amazon so the ETFs go down, which brings down everything.
Of the indexes. No, but
that's what I'm saying.
It doesn't do that. Like, what's the mechanism for which it's going to take down that other stock in the index? It really doesn't do that. As I said, you had 2 stocks up for every 3 down today.
Kevin, what do you make of a nearly 1,000 intraday point swing in the Dow? Some of these crazy moves we're seeing.
Volatility's back, obviously, and I just want to defend the ETF structure because people can't blame ETFs for volatility, actually. They're very liquid. The large cap ETFs can take billions of dollars in and out of them in just a few minutes. They work quite well. So the gapping that was attributed to ETFs years ago has been fixed by most of the trading systems. I will say one thing about this correction as we all look for the bottom. Obviously, the high PE stocks are correcting. Earnings were good. Basically, 2/3 hit their revenue side and over 90% hit their earnings. But I always say about a correction, I'm a bond guy, and a correction isn't over till the bond lady sings. And she's not singing yet. The triple B, double B, single B complex. Remember, most of these companies, the large cap ones, have issued debt up their balance sheets. And if you thought they couldn't pay back that debt when these 36 months and 4-year and 5-year periods end, because all this debt's coming due within 7 years, most of these issuances are under 7 years, and there's lots of issuances that are coming due in the next 24 months. If you really thought that they couldn't pay it back, you would have a blowout in the credit markets, the single, double, triple B markets, and they have barely moved. So this correction's not over yet. I like it when the bonds are just blown out. Then I know the toilet is flushed on the equity markets.